Today's session is about whether cheaper land cost would result in cheaper launch price based on hard facts and figure. Question: when your house was bought at a cheaper price, so just imagine that if the current transacted accepted price for your house is 2 million, A, would you sell at market accepted price of 2 million? Or B, would you sell below accepted market price since you bought cheaper? A or B? Let's discuss real case studies. We are going to use the recent land bid from Tembusu Grand as well as the Emerald of Katong. Tembusu Grand land bid was 1302 per square foot per plot ratio. The land was bidded January 2022. 1 year later, in 2023, EOK land bid was cheaper at 1069. Location is respectively Tembusu Grand and Emerald of Katong, both up to 21-story height. Cheaper cost, would you sell at accepted transacted market price, A or B, if you are the developer? Purely based on the research base, Emerald of Katong, even though bought the land cost at a lower price, the developer, being a profit-oriented developer, still sell at accepted average transacted price of 2637.1 per square foot. In fact, it sell slightly higher 1 year plus later relative to Tembusu Grand. Average accepted transacted price adjusted for harmonization was 2591. 1 year on, Emerald of Katong, even though bought at lower land cost, still sell at the accepted market transacted price. In fact, slightly higher. Hence, land cost versus launch price analysis, we discover one insight. Lower land cost, as illustrated in Emerald of Katong data, equal market transacted accepted price. So we can see that Emerald of Katong developer actually factor in Tembusu Grand average transacted price of 25xx to launch higher at 2637.1 per square foot. This is the data from URA using SOREAL. We can see the average transacted price harmonized for Tembusu Grand was 2591, and Emerald of Katong achieved a transacted average price higher at 2637 based on a solid 99.7% sold unit or 843 sold unit average price. Insight: low land cost does not equal to lower transacted price. We want to make sure that this insight based on facts and figure will help client make informed decision, and as a result would not lose 1+ precious year for waiting something that result in higher price that they are going to pay. So can you imagine, it's like a double whammy. I have to wait for 1 year plus, and yet I have to pay higher transacted price because of the misconception that lower land cost will result in lower transacted price. As you can see from the Emerald of Katong and Tembusu Grand's case study, it shows that developer being profit-driven would still want to sell at accepted market transacted price. This is an important insight that as an investor or homeowner, we want to bear in mind. It is not a secret because so long we put ourselves as also as a resale seller is like also like developer. We ourselves also would want to sell at market transacted price, even if we really bought our home lower. Is that correct? You just think about it. Hence, learning from this case study from Emerald of Katong and Tembusu Grand, Prop C case study into Alta and Faber Walk. The of Alta is along Clementi Avenue 1, and a Faber Walk is a low-rise 5-story development with a plot ratio of 1.4. It has approximately 400 units, which likely to be launched 1 year later because the land bid was about 1 year later at lower land cost of $900 for this low-rise development. Looking at the visual, you'll know that Alta location to the Clementi MRT is shorter versus the Faber Walk. Learning from the insight from previous case study of Tembusu Grand and Emerald of Katong, the data suggested lower land cost does not equal lower transacted price. Question: Faber Walk profit-driven developer would also factor in Alta transacted prices. Do you think so? If you are the Faber Walk developer, just like Emerald of Katong developer factor in Tembusu Grand price. Question: does it make sense to wait 1 year plus for this low-rise Faber Walk 400 units development? Or should one enter now in Alta for this high-rise iconic tower now? Recall, Emerald of Katong, even though lower land cost, it still sell at higher launch price, factoring in Tembusu Grand average transacted accepted price adjusted for harmonization. I hope with this research-based, non-emotional approach, we'll better able to guide you on this important green box. Whether it makes sense to wait 1 year plus for this low-rise Faber Walk, which, based on the case study, data suggested developer would most likely still sell at market accepted transacted price 1 year later. Or should one enter now in Alta to grab the current accepted transacted price? I hope this session you have learned more insights about land cost versus launch price. Thank you for attending and see you in the next Alta session. Bye.